Good morning, everyone. Glad you're here today. Hopefully you're having a nice beginning to your summer. Oh, excuse me, I didn't take a sip of coffee there. Yeah, I see some familiar names. Welcome, everyone. Yeah, so let's just kind of get rolling here. Today we'll take a look at 3, maybe 4 markets if we have a chance here. But of course, we got to always chat about risks involved with trading. Well, Nadex makes it extremely easy to get into the market as well. And of course, you have limited loss. You have to always remember that you are going to have losses, and don't trade with anything but risk capital. Don't trade with the rent money, the food money, that sort of thing. Only trade with money you can afford to lose. All right, that's me. I think most of you have been on here before, and you've seen my mug before, but that's me. Let's see, let's take a look here at some of the news for the upcoming week. I always like to do this basically every day just to make sure I'm on top of it. I didn't miss anything, that sort of thing. This is actually a big news week. We'll get to that here in just a moment. And let's come over here. So these are the 2 economic calendars I like to check out. And quite frankly, Forex Factory is the one I spend most of my time at. In fact, today that's the only one we're going to look at, but my FX book is a very good one as well. I think it just really is a personal thing, which you prefer and how you like to set it up. But let's go over to Forex Factory right now, and we'll take a look at the news for the rest of the week here. So let me just switch pages here. Okay. All right, so this is how it looks when you arrive here. This is, again, forexfactory.com. Just go to their calendar. The tab's right there, kind of in the center. And what I like to do is filter this. So I come up here to the filter, and I'm only interested in these high impact events, the red folder. So I just uncheck everything else. Uncheck those, hit apply filter, and now you can see the main news events. So for today, for instance, there is an event at 10 a.m. Eastern, which starts at in about an hour. These are all East Coast time listed here. But so that is a big thing with Bank of England Governor Carney speaking. Wednesday, that is a huge day here as far as news. We have Draghi speaking at 10 a.m. He's the European Central Bank president, so he's a big deal as far as making markets move. Then we have all of this out of the U.S. here at 2 p.m. tomorrow. We have the FOMC economic projections, the statement, and the Fed funds rate. And then at 2:30, we have FOMC press conference. So big day in the US as far as news goes. And typically for me, I just like to sit on the sidelines unless I already have something in play where I'm already, have been able to capture some profits. Otherwise, I'll just probably sit on the sidelines until well after that, the news tomorrow. That is going in tomorrow. So in other words, not looking for anything longer term hold or through a day or that sort of thing on Wednesday. Thursday, we have some good news, or good bit of news, I should say, here out of Great Britain. Look at that. So all different times here, spans about 12 hours, but there's a lot of news there. And on Friday, out of Europe, for Europe, the EuroFX, French flash services, then out of Germany as well. So anyway, there you go. A good idea to check out the news ahead of time so you're not making trades right in front of the news, and then you get these unexpected results, which could be both good or bad, and just not in my mind, for most folks, good to try to trade the news. All right, any questions on this before we move on? Got a few markets to look at here this morning. All right. All right, so next here, we just looked at that. So let's look at the charts now. All right, let's do that. Let's load up the charts and we'll get to the markets we are going to follow. So oil inventories typically are Wednesday morning, 10:30. It's a low impact event. So it's usually a yellow folder there on the Forex Factory news calendar. Yeah, you bet. All right, so here is, in fact, let's start out here with the S&P. So make sure you've switched over to the September contracts for the stock indices. I have those listed up here. And we're going to start out looking at the S&P, which is the US 500 on Nadex. And we're just going to start here and kind of work our way down in time. If you haven't seen my workspace before, this is it. I look at multiple time frames based on multiple time frame analysis with a combination of a read on momentum or energy in the market, cycles in the market, and chart patterns. Just to kind of break it down in a little nutshell there. So what we're going to do here is we are going to start here at the daily and work our way down. And just so I want you to get a good idea of what's happening here. The market is it has got a lot of energy. If you look at this indicator here that I have developed, this is called my cycle trading momentum indicator, part of my methodology. But it is a lighter blue here right now, almost a whitish color. So that's suggesting that the market is running out of steam a little bit. Now that can change if it's going to break this high, for example, this momentum indicator break this high. But the market is trying to push up. It's essentially real close to the high here made back on June 11th. We almost have a bull flag. It's getting a little bit extended, but we have a flag, and then this would be the flag pull. Everybody see that? And if you look at that, that's a bullish chart pattern. And in combination with energies that are moving to the upside, suggesting that perhaps we're going to have a breakout to the upside. Of course, no guarantees. But that's the point now. So we're going to work our way down and kind of get a better idea on this. So that's again, the daily chart. You get a good glimpse of key support or resistance levels. I have those marked off here. The key levels from this time frame are going to be in this purple, these purple lines. All right, so let's come down here. So next we'll come down to a 729-minute chart, and you can get a little clearer look at this as far as the detail. And here's that flag that I highlighted here. Some would just call it a channel, but we have that nice rally up into that area. And you can see here on this viewpoint that the market is, very, very close. In fact, let's get a look here. This high was at 12 a.m. on June 11th. And let's actually take a look here at the actual price. So the price was 29.1575, and today's high is 29.16. So it just poked above it here for the moment. So just has poked above it. Give me just a quick second here. And so at resistance, trying to break through resistance, but look at the difference in momentum here within this time frame. Look at the loss of momentum here on the same type of move. And what's that is suggesting is that the market, if it breaks higher here, even higher still, it's going to be divergent against the momentum. And that would suggest a possible turnaround back to the downside. So that any rally here may be short-lived, at least for the initial time being. Now, as we look here, you can see, again, we're at that daily resistance. The market just kind of poked above it right here for a moment. And above that, we really kind of got to come back here on this other side. There aren't any really super clear resistance areas, but what I'll do is I'm going to draw a trend line here, across the high, across these lows, and that would be kind of the next level that we'll keep an eye on here. So that comes in, it looks like here at 29.28. So about 15 handles higher. But notice this, so we still have a lot of energy. This is still bullish momentum, but obviously it's fading quickly. In fact, if it crosses over the zero line, which is just down here, you can see right there, there will be a change. It will flip to negative or bearish momentum. All right, so let's go down. Let's look at the 243, or a lot of folks will look at a 4-hour chart. You can do that on Nadex 4-hour chart. And again, another clear view. So you can see how the market's really pushed up here over the last 8 hours or so. Off of the lows here was a channel down here. Smaller range. Momentum within this time frame just going positive. See the difference here? Big difference between this chart and the 729. The 729 had lost a lot of energy, and where the daily and the 4-hour chart still have energy going to the upside. In fact, that specific chart is kind of sandwiched in between these others, because if we look down even lower, we'll go down to an 81-minute chart. Look at that, a lot of energy still to the upside. It's up against resistance. So what I like to think of when a market tests a resistance or a support level, we're going to get some sort of reaction. In other words, in this case, a pullback prior to any sort of advance. Now, of course, that is just kind of speculation on my part, because I don't know that for sure, but just through looking at thousands of charts over the years, that is what we typically will witness. Now let's come down here to a 27-minute chart, or on Nadex, you can look at a 30-minute chart. Look at this run right here, pretty substantial, isn't it? So let's use the Fibonacci tool here and just kind of measure out a level of a possible retracement. And I like to focus in on the key levels here, which are the 382%, the 50%, and the 618. We'll just draw a little box to kind of highlight that area. And the reason I'm doing this is because this is an area we could anticipate the market pulling back to. Here, if this test, again, we're above that level now, you can see that purple line that was off the daily chart. You see we're sitting above it. The market is just kind of holding on here. We have about 18 minutes or so before the opening bell. But again, strong momentum. It has curled back a bit, and we are in an area we could see a cycle high. So this is what I mean by that. When this is the midpoint of this indicator, if it crosses there, that verifies that cycle high. But the market's going to have to come down a ways for that to happen, isn't it? So we could lose some energy here, but right now everything's very bullish. Let's come down here on the 9-minute chart. That'd be the next level down. All right, so this is more telling. This is kind of more in agreement to that 729-minute chart, in that we have, look at this peak in momentum. Look where it is now. It's negative, isn't it? And if we look at price has pushed in new highs. It's gone higher to higher highs. Now we're over here, but from high to high, and that comes in, yeah, about right here on this indicator. But my point here with this is that the market is divergent in this time frame. So we also have here is kind of a head and shoulder pattern trying to take shape. This is a reversal pattern if you're not familiar with it. Just kind of imagine somebody standing in front of you with a, and you're looking at their head and their shoulders. So we need to wait for a right shoulder to form. And typically I like to use the asymmetrical patterns rather than the perfect symmetrical patterns. They tend to give us a little more bang for the buck if and when they develop here, but we have negative momentum, which is lining up with a possible reversal pattern here as well. All right, so even though we have a lot of energy going to the upside, doesn't mean we can't trade these little cycles to the downside when they materialize, but we just have to be patient. And so I use these tools to help time entries. So let's finally here look at the 3-minute, and we can come back to this right at the bottom of the hour here in about 15 minutes. We have some other markers to look at this morning. So on this chart, I see even more. So you see this area as the left shoulder, the head, and then there's actually a little pivot high here. So that could be considered a possible shoulder here on this time frame. Which we didn't, I didn't really see that on the 9-minute time frame. But I don't want to sell here at a, with this down here. I want this, let me grab my pen here. I want this to rotate, and I want to sell a cycle high with negative momentum. So not ready for me to jump on board yet. So the other side of this coin is within every topping pattern, you should be able to identify a triangle pattern. And that is a trend continuation pattern normally, but we kind of have a flat bottom here, don't we? Which can lead to a bearish breakdown. So we have some things to watch here on this, in this market. Watch for the pattern to take shape. I think that's going to be first and foremost. This little ellipse that I just drew here looking for the market to perhaps, if it does break below this support level here, we have the one off the daily chart, we have the bottom of the triangle pattern, we also have the 50-period moving average, all acting as support. If that gets broken, there's a good chance the market could move down and try to test support of the 89-period moving average, this red line. Now with that in mind, we have this right there. So you see how that's another support area there. So some things to keep an eye on here today on the S&P and see if this pattern forms. Now, if the market breaks up, and remember we have a lot of energy to the upside, if it takes out the high here of the head, then that's all disregarded as far as a reversal, at least at this point. All right, so that's the, the September S&P, or also known as the US 500. Next, let's take a look at gold. Gold is up $12.90 basis the August contract here this morning. And you can see I already have some zones marked off here. And in fact, let's just take a peek here quickly at the daily chart. So again, this is the August futures contract. And this here is the prior high for the contract. And so let's see here. This was 1361.50, the high over here on the 14th, 1362.20. So the new contract high right there on that white candle had a big day to the upside and then reversed and ended up down here, closing kind of back in this consolidation area. So you see here, this line I just drew touches that wick and also touches the real body of this candle and the wick there. So the real body is the thicker portion of the candles. Consider those more or less major support or resistance areas for as far as a candle is concerned, and the wicks more or less minor support and resistance levels go. So what I want to do is kind of highlight that as well. And then let's just go back down and look at the 729 chart, for example. So here on this time frame, you can almost see a reversal pattern trying to shape up. And that's today's spike, so no right shoulder as of yet. A little harder to draw a triangle on this guy. But here we have the move up, and we have momentum growing again. We have the cycle study that's pushing up as well. So a lot of energy. You see where the market kind of got rejected here as it tapped into that red box that I have, that red zone. But very bullish. Look how far the market is from the moving averages here on this time frame. That's a very bullish market at the moment. All right, so let's come down to the 4 hour. We'll just kind of do the same sequence here. You can see again, kind of testing that area here. We see an increase in momentum as well, potential for the market to kind of fill in this area here. When I talk about being filled in, the market likes to test, or markets like to test or fill in where wicks are left behind. There's a wick right here, the thin part of that candle. So that would essentially mean that box there, the red box. So 1357 and change to 1362. So about $5 width or height here of that red zone. So you see bullishness here. Now the markets don't necessarily move straight up or straight down, right? They're going to shuck and jive, give you head fakes, that sort of thing. So we may see a little pullback here back to support of this purple zone. Very strong momentum here. But anytime we start to see some cycle highs, this is where I anticipate some sort of pullback may be coming sooner than later. In fact, if you look at this, here's a good example. This isn't much of a pullback, but notice here right there at the bottom panel of the chart, the little hook down on that indicator. Momentum was still very strong to the upside, but we had a little bit of a pullback here in price. And that kind of coincides with that right there. So we really haven't had any great retracement yet since in this time frame. Looks like since this move right here. You can see how that tied in right there. All right, so again, a lot of bullishness. Let's look at the 27-minute. All right, so this is actually divergent here, real close to it. This is maybe slightly higher high on the momentum here, just slightly, but way higher high here. Look at this. So I would anticipate some sort of retrace here down to at least this area here. The market will tend to seek out the nearest level of support or resistance once it goes divergent on these indicators. And that appears to be right in here, the purple line, which is off that daily chart we reviewed. That's 1352. So that, you know, a couple dollars, $2 or $3 lower from where the market is at the moment. But again, if you think about this, the markets tend to move, let's see, you know, cycles, right? Waves. Same on the downside. All right, so let's go back. I'm gonna actually, we'll load up the 9-minute chart here. And let's look at this as far as the area we could anticipate that could the market could move into here. So let's do this. Right into that area would be the anticipation. No guarantees, just anticipating that based on what I've talked about so far. And then I just ran a trend line here kind of across this shelf that's developed here. Losing a little bit of momentum here. You can see the out stair stepping lower. So this could come all the way down and cycle down. This lower indicator cycle down, something like so, which price may do something like this. And if that happens within this uptrend, that could be a possible trading opportunity to the upside. And then we look for the market to come back up and retest this recent high, which is right above, right below that red resistance zone there. Does that make sense? Any questions on that? Come over here, and now look at this. Head and shoulder pattern in place. Just do it like this. So left shoulder and head, and right shoulder. And so the breakdown, I'm not going to sell in here though. I want to see a little bit of a move back up. So I need, for me to sell any binaries in here, I need this to come up in this range. So price is going to have to move up a little bit before it moves down for me to take a potential position in this market based on this pattern. Remember, overall, it's bullish, but we can perhaps capture a bit of the cycle back to the downside before any sort of continuation move. Now, there's not a whole lot of news today that would affect gold, at least at this point, more so tomorrow. So the news events that we covered at the start of the program here today will affect or can affect the stock indices, the currencies, the metals, even the energies to some degree. All right, so that's kind of the plan there. And let's see here. We can also look here at, it's either going to be US dollar or crude oil. We're just kind of running out of time this morning. I think we're going to look at no, I'm sorry, I said US dollar Canadian dollar is the one that was just up there. We're going to look at crude oil, July crude oil here this morning. Yeah, good morning. So this market moving very nicely here at the moment. We're going to start out here again at the daily chart and just work our way down, and then we'll wrap this. Once we wrap this up, we'll take a quick look at the S&P as we started out there this morning. So here's a support zone. You see where the market is at the moment. I'm actually going to adjust this. We're going to come all the way over here on this. Yeah, so that makes a little more sense. This is on the daily chart. And let's see here. So this is a resistance level right here, that little pivot. See how it's pointy right there? So I'm going to draw a line there, and we'll change the color of that guy. And this is more of a, actually I'm going to get rid of that one. All right, so those are kind of the areas here. So the market's still in the support zone, looking to push up and out of that. Here at the moment, we have momentum that is still bearish, but is trying to, or quickly moving towards being bullish, crossing that zero line. If that happens, then if you just take a look here, we have horizontal resistance, which is that wick, and I could even shore that up a bit as well, but we also have that moving average, and that's pretty much the area it takes to get up to that level. Here would be another line we could drop right here, kind of across these wicks and the real body right there. So it's, to me, the way I trade, this is very important to do, because this is where I have a realization of where roadblocks are, right, for either higher or lower prices. The zones represent that, the individual lines represent that as well. So I think it's real important that you do this because it tells you a story. All right, so I'm just going to jump down to the 4-hour chart or 243-minute chart. And you can see how we're right up against this resistance area here. We had a head and shoulder that formed last week, and look at the breakout to the upside out of that. Actually, that was June 4th. June 6th was the big day up out of that. So the market came back down into this area and really kind of double bottomed here. All right, counting that. So if you look at that low right there and this low right there, that's a big double bottom or 1, 2, 3 pattern. Some of you may know that pattern. So market consolidates and now is testing resistance to push out, and we have that area right there. If it gets up and out of this area right through here, I would anticipate that would be a next level. That looks to be about $1 higher to this, you can see 53.86 right in here. All right, so let's keep going here. '81-minute chart. So you can see I have three different moving averages on here, the ones I tend to pay attention to. The blue one's the 50 period, the red one's the 89 period, the 200 is, the purple is the 200. They're all simple moving averages. The market is coming up into that level here, which also equates to resistance here. Momentum has shifted to the upside. You can see how it's blue now. So a lot of energy here. So at this moment, I would prefer to watch this break through this area that we've been talking about and then pull back for a possible long entry. Here, if we look at the 27-minute chart, you can see how we're a little bit more clarity here, how it's testing this area. So the green zone. So there's an old phrase in trading. If you have a channel, for instance, like this, and the market's doing this inside, then all of a sudden it breaks out, then you look for a retest or a pullback to the channel highs, which is right there, and then look to get on board in here to ride the next move to the upside. So you see how price is breaking out of that zone right now. Right there's that resistance, and now the market's just above it. So let's keep moving down here. We have a few minutes left. Everybody understand this? So look how bullish this market's been. So rather than chase this, we want to wait and see if we get a pullback for a good entry or a better entry. One of the biggest causes of account blowouts is fear of missing out, or FOMO. And as long as we have free markets, you're going to have a ton of trading opportunities in your trading career. So there's no reason to chase a market. Because typically, when you buy, you're going to get left holding the bag, right? That's going to be the high of the move. Or chase the market to the downside. We don't need to do that. So you can see how clear the breakout is here at the moment. So what I'm going to do on this chart, a couple of things. I'm going to use the Fibonacci retracements. I'm going to measure from this low to this high. Now it could go higher, so I would have to readjust it if that's the case. Come down here as I did earlier this morning on one of the other charts. Just kind of box off the 382.5618 level and possibly look for a retracement down into there. That's much further right than just the top of that range that we talked about, but clearly a lot of bullishness in the market. Now, if it makes a new high, then I would have to readjust that. Let's see if we can, there you go. So now you get a little better idea there where that green box is in relation to price on the 3-minute. Have to really scrunch it down there, but that, let's sync this over and see where that falls. So you can see that's well back into the range here. So if this is a legit breakout, it's not likely the market's going to pull back into that today if it's a legit breakout. All right, so we got some things to watch here. Watch some things to unfold. Don't chase the markets. A good lesson, good takeaway today. Maybe the key point, we've marked off some support and resistance. We talked about the news events here this week, a big news day tomorrow out of the US, and then later in the week out of Great Britain, out of Europe. So we need to be aware of all of that. Let's look at the S&P before we end today's session. See, it's up 15 points here. The market just opened about 2 minutes ago. So this is the box I drew on earlier here on the, whoops, that's not the right chart. Come on. That looks like my chart's locked up here. Well, that's not helpful, is it? So the S&P is at 2912 quarter right now, and there we go, just took it a bit. So yeah, so look at that. Let's blow this chart up, the 3-minute, and look what, remember we marked all this off. See how the market came down into that ellipse? It came all the way down here, right there, folks. See that? Remember, these are 3-minute candles. I don't remember exactly where I drew this, but I'm going to say somewhere around in this area here. The market started to move up a little and then drifted again. On the open, came right down, filled in the 2/3 of that ellipse, didn't it? Just kind of projected that out, that needed to happen. But that we had a lot of what? If that was a possible entry area, we had a lot of momentum, right? A lot of energy to the upside. I'd still like to see a deeper retrace. You look at the 27-minute chart here in the lower left corner, you could see that's where that Fibonacci box area is. That's a pretty deep retrace. And these charts are locking up. For some reason they're slow right now. Anyway, I think I'll go ahead and just end it there, folks. Thank you for joining me again today. So we're going to take the, I'm actually going to be away from the markets for the next couple of weeks with family. And so I will not be on the air here with Nadex for the next couple of Tuesdays. So we'll get after it again. Let's see, what day is that going to be? It will be, I believe July 9th is the next one we'll do. Before we go though, don't leave yet. Don't leave yet. I wanted to show you a couple things here. Let's see here. So all right, so I do a seminar every year. Every year I'll be doing one in Chicago here in about a month. And so if you are at all interested, I'll send over the information here to you. You can go read about it. If you're all interested, feel free to call our office and we'll send it over to you. There you go. This is the web page here. We bring that on for you. And it just gives you a brief background about it. It's all binaries, all binary seminar. It's going to be held a Friday and Saturday, July 19 and 20 in Chicago, right downtown in the financial district. We'll have reps from Nadex will be there as well. I encourage you to come and join me. Come and check it out. Been doing this for a long time. There for many years, I was doing 2, 3, 4 seminars a year, but now with the webinar and all that, it's a lot easier to just do them online. But this one will be live in Chicago. So I encourage you to check that out. And what I just sent you over the link for that. And in addition to that, if you have any questions here, feel free to contact us. And there's our contact information right there. So gbebinary.com. You could email us directly right there, support@GB members, or call us. We're out in the on the West Coast. I'll spit it out. In Oregon, those are our office hours, 8:30 a.m. to 5 p.m. Pacific time, and there's our phone number right there. So we are real people. We have an office. We have a staff. You're welcome to even stop by whenever you like. But there you go. So if you want to find out more about the seminar, I just sent you over the link in your little message box, and there's more information on how to contact us. All right, everybody, have a great day. Thanks again for joining me. I appreciate your time, and hopefully you pick up, as I say most webinars to folks, if I remember, if you can just get one nugget out of it, to me, that's worth it. That's the way I look at it whenever I attend a webinar or a seminar. If I can get one nugget out, that should help. Yeah, thank you. Thank you. We will do that. We will enjoy our vacation, you bet. I try to basically just let the recharge the batteries a couple times a year, usually once in the summer and then again in the winter time as well. And it's a good time right around the 4th too, because things oftentimes slow down. A lot of money leaves the markets for vacation as well. So you folks be safe and have a great couple of weeks, and we'll see you back here in a couple of weeks. So have a good one.